I'm joined now by Lawrence Amadi, partner and head tech risk at KPMG Africa, to review some of our top stories in more detail. Good morning. Great to see you, Lawrence. Welcome.
Great to see you once again, Rolake.
Have you been in the metaverse?
We've been in the universe somewhere.
Yeah, because it's been a while.
Yes, and finally the metaverse.
Speaking of metaverse, innovation just doesn't seem to stop amazing me. Now, Alibaba's AI-powered smart glasses, which we're struggling to pronounce, it's called the Quark.
Yes.
Q-U-A-R-K.
Correct.
So why is this such a big deal?
So let me start off by saying it's the war for the gig economy.
Okay, can you break that down?
So I mean, it's about content creation.
Okay.
And what these AI glasses are doing for us is now seamlessly just allowing recording flow without you bringing out your mobile device.
Okay.
So it is disrupting, cameras, phone cameras, regular cameras. And today it's about $561 billion in valuation.
Wow.
Estimated to grow to $1.7 trillion by 2031.
Incredible.
Yes. So the Apple vision is in the play. No one is talking so much about it. But when Meta came through, this started at about $800. And, when China comes into the market, I mean, so similar to
the valuation you just reeled out, is that for Alibaba? Or?
No, the valuation is for the gig economy.
For the gig economy. Okay. So now, the images are incredible. It looks so sleek, lots of steez and all that. But what about privacy? I mean, you're creating content from everyday observing of people, places, whatever the case. But what about privacy concerns?
Well, increasingly, the concept of privacy is going to get blurrier by the day.
Right.
And this is why Europe is hardly ever in the forefront for innovation, because they're big on
and they're highly regulated.
Data privacy, data protection.
Yes.
They push all the regulation around privacy. But the America and China, this is war for subscribers, war for revenue,
right.
And also war for who's the bigger economy.
Interesting. I was going to say there's obviously a broader geopolitical undertone when we look at the US and China constantly in this tussle, even though these companies at the center of innovation are in the private sector. But that particular dynamic cannot be lost on viewers. Now, interestingly, still in AI, this group called the Official Monetary and Financial Institutions Forum are saying that the world's central banks are saying digital assets and AI are not a core part of operations. Are they kind of out of touch here?
So if you look at the adoption of AI,
right,
there's a lot going on in telcos, there's a lot going on in banks, commercial banks.
Right.
There's a lot going on in consumer, in manufacturing. When you look at the central bank, you can always get that feeling that, they're not going to be the quickest to adopting AI. We moved very quickly from just the AI prompting to generative AI, and then now to agentic AI.
Right.
And now, what these agents do will be, things like booking transactions, booking logistic stuff, processing reports or processing, key activities for companies. The central banks would be a bit cautious. They are known for monetary policy predominantly.
Orthodox.
Monetary policy predominantly.
Yeah.
So they won't be quick to jump in on AI. And the concept of AI ops is getting really big, because in the telcos, network optimization, revenue assurance, customer journey, they all require AI.
And it's interesting because the targets of regulation in the banking system globally are the commercial banks and other types of financial institutions who are being regulated by central banks.
Sure.
And those stakeholders at the forefront of innovation, they are adopting AI. So in a sense, the regulatory overhang for central banks around the world around AI and digital is going to increase.
Look, spot on.
And in order for them to deal with that level of increase in volume, they will need AI in order to be able to do their work of regulation and oversight efficiently,
So they will eventually catch up.
Right.
I mean, ever since we entered the industrial revolution era, regulation is always behind the operators or the markets that they regulate.
Right.
So it's only natural that it might take some time. When they sit to decide on what the policies should be, cash reserve ratio, they still do it the traditional way. They're having regular conversations, but the data, large language models will disrupt these things with time.
Yeah.
And I reckon it's a matter of few years, and I think this is all going to change.
Okay, anyway, let's move away from technology. Let's talk about the energy transition. The AfDB has approved a $500 million loan for Nigeria's government on a second phase of the Economic Governance and Energy Transition Support Program. Tell us a bit more about this development.
So this is the second phase of the loan. I think we had in 2024 similar $500 million, allocated for energy, but this second one has an additional lens to it. So the AfDB is pushing on the continent for cleaner energy. They're pushing for public financial transparency. They're pushing for reforms that would help elevate governance on the continent. So part of that money is supposed to be channeled, in this direction. Now, the deployment, becomes really critical. Our debt exposure keeps growing. So it means we've got to find a way to then, enforce the utilization to the T. Now, election year is coming. We've got to all be very careful how these loans are being utilized. And I think we've got to pay attention.
Okay, do we know what happened to the first tranche of $500 million? How that was deployed?
First tranche, I would not be able to talk about that so much. But I reckon, we've seen some improvements. There were a few deals that we saw, ESCOM on the continent, TCN, enhancement and the likes.
Okay,
but we still have some way to go. And, if you look at the reform in the power sector, there was also a big strengthening of all the OPCOs or the DISCOs in the country.
Right.
So the distribution companies had to be strengthened. The tariff, MITO, had to change, which put us all in band A, B, C, and...
I say put us all. Speak for yourself. How do you know that?
Put us in the bands and, just to help them survive.
Right,
So essentially, it's to just drive the reform in the space.
And I guess the critical things with these sorts of loans and facilities is really how they directly impact on the infrastructure that they're targeting, and that we actually start to see the real impact of it clearly. Let's talk about CBN. I have a deeper discussion with an economist later in the show, but I want to talk about the compliance levels we've seen with the banks and the recapitalization. This is a good sign that our financial system, our banking system, is in good stead for the future.
Yes, but again, sometimes if I bring a personal view to this, it still sort of feel like we need fewer stronger banks. Yes, we're seeing a lot of recapitalization conversations. PENCOM is pushing, NICOM is pushing,
insurance,
and then and it's all happening in 2026. If you go to South Africa, they have 4 strong commercial banks. 4 ABSA, FNB, Nedbank, Standard Bank. Every other bank is, either a merchant bank, a specialist bank. And these guys are now the smallest of the 4 banks in South Africa is, look, if you bring the banks in Nigeria, it probably struggle to compare. But the CBN realizes it's important that we have a stronger economy and is hinged on the commercial banks, the deposit money banks. So their survival is crucial. In 2020, they had the forbearance, that allowed them, reclassify some of the loans they're giving to oil and gas sector, without necessarily impacting how they've carried us on the impairment side of things. Now the CBN is saying, you've got to find a way to now get back to business as usual. I think about 7 banks, would have to deal with some of those adjustments. But back to the capitalization, we were expecting that there'll be more consolidation. So that
and why haven't we seen that momentum towards consolidation?
It's, I think every single bank is striving to still maintain their name. There are a few that are still ongoing. Some banks are talking to themselves, to consider, coming together. But I reckon early next year will be very interesting. Because for the guys whose share issues, the guys have done IPOs and the likes, if they don't actually have the sort of numbers they're looking for, I think between January and March 2026.
They will start, yeah. I mean, the timeline is incredible how the time deadline has kind of crept up on us.
Correct.
I don't see a bank starting a discussion for the first time on an M&A or consolidation and completing that process in March 2026. So it's going to be interesting to see how we end up once we've done the assessment and the full view. But they're telling us we're running out of time. Just very quickly, one statement on the NPR decision this week, on the whole decision, very briefly.
Very briefly, I think it helps with stabilizing the macro. Still tough for businesses in getting credit,
right? Because
the NPR is a major driver. The cash reserve ratio is at 50%. That's at 27%. I think businesses are still. I mean, the good thing is they can plan, they can project. FX is stable. That helps, but. If I'd say anything, keeping it stable might just be a safe way to go.
Okay, thank you. Our tech guru, Lauren, so great to have you back in the studio.
Thank you.